What is going on, everybody? It is Tukey. Welcome back to the Tukey Supply and Demand Bootcamp. Hope you guys are all doing well. For this video, we are going to be covering how to specifically understand supply and demand within the markets. Understand how supply and demand works, why it works, and just have a better overall understanding of trading with supply and demand. Now, if you don't know who I am, I started my overall investing journey back in 2020. I've been trading with supply and demand since 2022. So ever since then, I've continued to just build my overall experience of understanding supply and demand, trading with supply and demand, and really building my trading system around it. So let's go ahead and hop right on into it and how you can get a better understanding of this all. Now, let's go ahead and just overall start with our supply zones, which I also like to consider our selling zones, right? The best, most simple way to understand it is you have obviously your supply zones and you have your demand zones. Your demand zones are just considered your strong buying areas, and your supply zones are just considered your strong selling areas, okay? So as the traders that we are, we essentially just want to be looking for areas on the charts that presented either strong buying or strong selling. Now, keep in mind, supply and demand is constantly being inputted on the charts pretty much every single second of when the market is open. Without any supply and demand, price isn't moving whatsoever. Pretty much meaning without any buyers and sellers, price isn't going to be moving. Therefore, there is constant buyers and sellers within the market. Now, as the retail traders that we are, our main objective is to essentially find those areas where those strong sellers or strong buyers are stepping in heavier than usual. Okay, that's why we have our supply and demand zones. Our zones are simply just areas on the charts where price presented a stronger move than usual. So for example, if we have our supply zones, those are areas, a price range on the chart where price previously inputted an aggressive move to the either downside or upside. Obviously, if it's supply, that would be an area where price then led to an aggressive move to the downside. If it was a demand, that would then lead to price being a aggressive move to the upside. Okay, so think of pretty much your supply and demand zones as obviously just your selling zones and your buying zones. Now, within the markets, think of it also like a scale, right? Let's say we have like just a normal scale, and this scale is how the markets move. On one side of the scale, you have your supply. On the other side of the scale, you have your demand. Now, in the most basic way to explain it, let's say there is more supply than demand. Therefore, the supply side of the scale starts to increase. When there is more supply than demand, that then typically leads to sellers obviously being more in control, which is going to lead price to overall being more bearish and overall moving lower, or moving to the downside. Let's say vice versa, the demand side of the scale started to go higher than supply, meaning there is more demand within supply within the markets or within that certain period of time, that would then lead to an aggressive move to the upside due to the fact that there is more demand within the markets. Now, something that we see pretty much every single day on the charts is chop, right? Is consolidation. Now, what that would be considered on the scale is when supply and demand on the scale are pretty much even. You know, supply isn't heavier than demand, demand isn't heavier than supply, they're pretty much even. So that is what leads to choppy price movements, consolidation, etc. That's why, like I was saying earlier, one of our biggest objectives as the retail traders is to identify where those bigger moves were made, because those bigger moves are also simply just areas where bigger money was inputted. Keep in mind, market moves based off of money. without any without any money being inputted and cycled into the markets, price wouldn't move at all, right? And like for most of us, we obviously want to be catching these quicker trades, these higher volume trades, and supply and demand is helping us with exactly that, because we're looking to utilize these zones that previously presented strong selling or strong buying. Anytime we have strong selling, we have a lot of money being cycled into the markets. Anytime we have strong buying, we have obviously more money being cycled into the markets. That's why these supply and demand zones are also like our big money zones, are zones where big money is likely to be inputted into the markets. And like I just said, when we have scenarios where that is the case, where big money is going to be inputted, that is what leads us to having those bigger, higher volume moves, which is exactly what we want to catch, right? So that is the biggest thing to understand in terms of supply and demand. Obviously, like I said, supply and demand is everywhere on the charts. It's constant. Supply and demand happens within certain key levels. Keep in mind, supply and demand also happens within, your order blocks, your fair value gaps, your strong lows, your strong highs, things like that. Supply and demand is essentially just any area where price is likely to provide us with that strong selling or strong buying. And the best way to spot that, the best way to determine that is by our supply and demand zones. Now, obviously, there's a whole different video within the bootcamp covering how to draw out the zones, but this video is me just dropping a bunch of sauce on how you can actually understand why these zones work and understand why supply and demand works and how it exactly works. So the best way to think about it is the situation that I brought up earlier. You have a scale. You have one side of the scale has supply, one side of the scale has demand. When price moves into our supply zone, we anticipate that scale, the supply side of the scale, is going to increase, meaning there is more supply than demand, right? So when this process happens, when we tap into our supply zone, let's say, for example, we tap into this zone that would be right here. We tap into this zone. We can obviously see leading into this zone, buyers are clearly more in control. Buyers are clearly stronger than sellers in this case scenario. Now, if we were to be trading off of this supply, we would want that to flip. So this whole time going into the zone, we had more demand than supply. But now that we tap that supply, we want to see those sellers start to step in. We want to see that excessive supply actually start to be cycled into the markets, right? So like I said, once we tap into that supply starts to increase, supply then becomes more than demand, therefore price starts to reject off that supply zone and move lower. It's obviously very basic economics, although a lot of people still fail to understand this and fail to get why this process of supply and demand actually works on the charts, right? Price within the markets doesn't just move up and down like some sort of video game. It moves for a reason. There is a story behind every single candle. And when I mean story, there is a buyer or a seller behind every single candle. And depending on the size of that candle, depending on the size of that move, that will determine how strong those buyers or how strong those sellers actually were within that specific time period. That is why we utilize these supply and demand zones, okay? Because we can be trading anywhere on the charts, but like I said earlier too, I'm gonna keep repeating this point. We as retail traders want to look for areas where that strong selling is going to be inputted, or where that strong buying is going to be inputted. And that's exactly what our supply and demand zones help with. Those zones are areas where we can get an idea of where that strong selling is going to start or where that strong buying is going to start. Also, keep in mind, selling and buying, that's just money being inputted into the markets. Strong selling and strong buying, that's more, lots of money being inputted into the markets. Money is what moves the markets. The more money that is being inputted into the markets, the more and larger price will actually move. Therefore, that's why the process of supply and demand is the case within our specific supply zones or demand zones, because that's where that big money selling or big money buying is actually going to be inputted. Now, let's find a demand zone. I should have an example right here. So boom. As you can see, we can focus on this one right here, right? We can see leading into this demand zone, sellers were obviously in control. We had a pretty aggressive move to the downside. Obviously, like I said, indicating that sellers were in control here, indicating that supply was clearly larger than demand. Now, what would we want to happen once price taps into this demand? We obviously want that scale to flip. We want that strong supply, right? We want the fact that since supply is stronger than demand, we would want that to flip. We would then want, since we are tapping into this demand, we would want demand start to be larger than supply, which ultimately is what's going to lead us to that reversal to the upside. And you can see here we had a beautiful reversal to the upside. Now, there are obviously different ways that you can understand whether those buyers and sellers are actually stepping in, or there are different ways to understand, are those buyers and sellers actually stepping in, and how heavy are they stepping in? There are different confirmations, which I will go over in a different part of the bootcamp. But for this, we're obviously just covering how to actually just understand it and understand why it works and how it works. Okay? So anytime you're thinking of supply and demand, think of the scale. That's like the best, easiest way to understand it. Obviously, the market doesn't move off of like a normal ass scale. You know what I mean? But that's the best way to explain it. When you have more buyers than sellers, price is going to move up. When you have more sellers than buyers, price is going to move down. Us as retail traders want to look to utilize these supply and demand zones, because those are zones where buying is going to be stronger than usual or selling is going to be stronger than usual. When buying and selling that's stronger than usual is inputted into the markets, that simply just means more money than usual is going to be inputted into the markets. And like I said earlier, money is what moves the markets. Orders are money, right? Buy orders, sell orders, they are money. Obviously, they're not free, right? So when you have an excessive amount of these orders being inputted, that simply just means you have an excessive amount of money or more than usual amounts of money being inputted into the charts. That's ultimately what's going to lead us to these aggressive moves, okay? That's the biggest thing to understand. So that's going to be it for this video. I hope you guys found some value in this, learned some new things. But other than that, I will see you guys in the next bootcamp video. See ya.